We've got Akzo Nobel in the spotlight. The question is, what is the competitive intensity going to look like? And will the premiumization trends continue? To answer these questions and more, we've got Rajiv Rajgopal, who's the Chairman Managing Director. Thanks so much for taking time out. Let's just discuss the competitive intensity. Just very recently, Birla Opus came out with their pricing strategy, quite aggressive at that. What is your outlook? How is the company positioning itself to capture market share?
Good morning, Aman, to you and to the entire ET Now family. For us, as I've been stating always on your channel, we are very focused in terms of three things: driving market share growth through our entire approach of driving distribution. We have been pretty strong in our tier 1, T1, T2 towns. What we've been doing over the last few years is dialing up distribution to the T2 to T4, and that's going pretty well. The second is really building up the brand, and you will see that in a few weeks' time, we will be sort of also coming with more aggressive campaigns in terms of how we dial it up. The third is really saying that how do we really play the portfolio? How do we make sure we've got the right assortments in the outlet? And make sure that we are able to ring fence market share with this competitive intensity. So there's work happening there. I think for me, I think the other two pieces to add is really on the paint side is really the work that we are doing on digital, really dialing up digital significantly so that we are ready for the wars or wars ahead. We already sell at a bit of a premium compared to most players. So to that extent, I think we believe that we've got a right to win because, Dulux stands for best in class product, international, and it's quite an unmatchable experience for consumers who use it, right? So for me, I'm fairly certain that we will continue our road towards driving market share and continuing to be in the top two in terms of incremental growth % as we move forward.
Rajiv, I'm observing that for your company, the core positioning is premium and of course mid-range. And you just spoke about how not only tier 2, but tier 3, tier 4 is also on your radar for penetration from here on. Talk to us about the metrics on which the buyer in tier 3, tier 4 actually reacts. Because I want to understand, or at least the popular belief so far was that tier 3, tier 4 is all about pricing. How do you break that, that beyond pricing to quality at a reasonable price is something the buyers should consider in mind when going about choosing. So tier 3, tier 4 is all about simply sasta kaun bech raha hai.
Ajay, I think you've answered part of the question when you asked me itself, so thank you for that. Look, let me just give you a dial in. Look, our promise. So we've got a brand called Dulux Promise, which we had sort of got in the early 2010s. We refined it as we move forward into a 2020 post-COVID. We launched a brand called Dulux Promise Smart Choice into the economy. So if I break that entire segment, there are two segments in the mid-tier. There is a mid-tier. Why do we play in it? Because the propensity of brands or consumers of Dulux to uptrade is very high from a similar brand, and I don't need to explain that. I think all of you understand that. I think the challenge for us was entering the economy segment because we want to do it in a profitable manner. You've seen our EBIT margins, we're the second highest in the industry, and this is if you take net of our royalty, you can even look at it. We are absolutely premium. So the trick was really having the proper architecture and the proper contribution margin to play. We managed to crack it with a lot of good work done by our scientists. And I think what we've now started to do is we obviously got a huge uptick because of the pricing. But as you rightly said, I think this is about providing right value to consumer. And that's where we are on. We've in our labs today, there's a lot of work in terms of research, which is happening in terms of what is the additional value. Obviously, that's a secret sauce. I would not be able to disclose it on a television interview, but we are working in terms of identifying the trigger to be able to drive propensity of our cohort users into the next orbit. So, and that's how you will drive a disproportionate, growth. So we believe, in this industry, it's not easy to do. Some of this are like in any industry, you can copy it in 2-3 years. But we believe that, even if you've got a good runway for a couple of years, and it has to be something which is truly differentiated, right? Then we believe there is a value and like you said, at the right value. I think that's what we are trying, to do. I think there are a lot of propositions available, but giving it at the right value and making sure that you're able to deliver the right margin structure with it is something that the teams are right now working on. What I can tell you is what we've done with Dulux Promise in January is we've relaunched it. We've dialed up are one attribute which is on coverage, and that's what the team is working on. The team is really intensely working on demonstrating the coverage that we give you better coverage than most other players. Yeah, so that's what we've done. This has started since January. There's a lot of physicality to it. What we are working to see is what is the right way to communicate it to a larger set of users and painters, the applicators, to be able to dial this up in a short period of time.
And we have also seen some signs of a demand pickup. What kind of trends are you foreseeing, particularly for the next quarter?
Look, so far, if you look at the last couple of quarters, the volume growths have been high, but because of the price corrections that got undertaken in the industry, obviously the revenue has been a bit tepid. But what I do expect is at a point in time the two will meet. And what I would like to talk is about a little, CAGR about a year and two. We do see that, look, eventually, by in a year or two, we do see double-digit growths coming back in the industry, pretty strong double-digit growths coming back, and we are working on propositions. We are working on various ways to make sure that we are able to entice the consumers and latch them onto it. Right? We've started investing heavily in our brand. You've seen it during the last World Cup. It was one of the highest spends we've done for quite a bit. In fact, for more than a decade, and we've seen the brand scores completely move up with that spend. So we are encouraged. We believe we are on. We've started. It's too early. We believe that with slow but surely we are on the right footing, and we believe that look, we would be able to pull things up in both our paints and coatings business, because coatings business, I think we are doing exceedingly well because our offerings are world class, and in both the businesses, I think because of the sheer quality of the products we offer, our ability, once we are able to communicate it in a more effective manner, I think we would be able to have a meaningful share in the market.
Before I let you go, Mr. Rajgopal, just a quick word on, how the metrics right now are on the cost side, on the distribution side, and even manufacturing. Your current run rate is, say, 4,000 crore annual sales, about 400 crore net profit, give or take, broadly. So do you think that this is, what the industry dynamics are? Because I want to understand, one of your industry peers has clearly spoken about profitability position in 3 years, the 10,000 crore revenue. I want to understand what are the dynamics. Do you think that's the net 10% net profit margin is kind of what is the industry norm?
See, look, for me to give it in a form of equation would not be apt, because I would also be letting, that's not something we do. But what I can tell you is, look, you hit the right needle. I think for us, look, the large part of it is the commodity cost. So it's not just the manufacturing cost, there's a commodity cost. And really, what is the competitive advantage we have? Look, we are a global player with large buying globally. We've got, we believe that we've got certain ingredients, and we've worked on that across some of our lead markets, Latin America, Brazil, China, South Africa, etc. We've created strong market positions. So we are pulling in learnings from there to try and make sure that we've got the right quality product. I think the challenge has been always in that category to get a right mix for the fit for purpose product, and that's what we're working on. Secondly, in terms of manufacturing costs, etc., look, I think I've heard commentary, but you've also got to understand that players like us are also fairly agile. So we are moving into digital solutions, into various digital initiatives in our factories, etc., to try and reduce the cost structure. I think that's on. I do understand that certain legacy sites come with a higher cost, but that's not true, because we believe that, look, we also do a lot of work in terms of looking at our equipment, looking at our what's the yield that we get in each of our plants, and how we sort of drive it. And we've got strong underpinning value creation programs that sort of run in our factories to make it very competitive, right? And the third, you talked of A&P. Look, I think you have the numbers. In terms of retailer margins, I think you again have all the numbers with you, because a lot of the analysts have been doing all that work over the last few weeks. Look, we've seen the pricing of the new entrants, pretty significantly. Yes, of course, there's going to be some aggression in the marketplace, yeah, and we are prepared for it. Look, in a short term, what would it mean to profitability? My EBIT margins, as I said, we are clearly number 2 in terms of EBIT margins, despite being the number 4 player in the industry, right? Clearly tells you the quality of business we have, and we will first make sure that we continue to be very aggressive in driving market share and dialing up our cohorts, our existing cohorts in each of our categories to not just be with us, but recommend it to more users as we move forward.
Okay, Rajiv, always good to have you on the show. Thanks for taking the time out and joining in.
Thanks. Thank you. Goodbye.
Okay, that's the word coming in from Akzo Nobel. But in the meantime,
if you like this video, then like, share and subscribe to ET Now.